it is the most observable economic environment of my 30-odd year career. And it's so obvious what 2024 and 2025 are, and that's more stimulus. They're going to be cutting rates. If they screw it up and inflation does go up, they will use yield curve control, which is printing of money, to maintain interest rates, which Japan has been doing. But generally speaking, it's a year of stimulus. In a year of stimulus, as investors, we need to say, okay, what's going to create the biggest opportunity set? The multiplier on all of this is crypto. It always outperforms all other assets, particularly in these moments.
Today we have Real Vision founder and macro strategist Raoul Pal sharing his predictions about the massive wave coming to cryptocurrency and the expected market cycle in the first quarter of 2024. Pal describes why a spot Bitcoin ETF is such a significant development. After studying previous markets and seeing the current trajectory closely following Bitcoin in 2013, Raoul believes we'll see a bigger spike than most expect. His bullish price prediction for Bitcoin stands firm and says we're on a fast track to a minimum of $100,000 in the coming months. This comes on the heels of BlackRock's Bitcoin spot ETF approval and the Bitcoin halving directly after. Raoul believes the crypto market is gearing up for a massive 20x surge in what he calls the biggest crypto and macro bull market ever. Let's get right into the latest interview with Raoul Pal as he gives his prediction for Bitcoin, crypto, and where we're headed in the first part of 2024. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
My view and my macro work was that the present state economy is bottoming right now. All the future forward-looking indicators all bottomed. Global liquidity, global financial conditions, they all bottomed last year. And the market's priced in a recession then. We've still got markets that are cyclical pricing in a recession now, stuff like the Russell 2000, oil markets, commodity stuff. But really all the forward-looking stuff priced it in a while ago, and it's been following financial conditions on a forward-looking basis. From all of the work that I do, I see nothing but stimulus coming this year. To Tim's point, there's, stimulus is another word for debasement of currency, and they do it in a number of different ways. The worst one, the most pernicious one, is the printing of money and putting it on the central bank balance sheet, using the balance sheet to buy debt, because what you're really doing then is pure debasement of currency, and most people don't understand what it is. They don't understand the fact that their purchasing power in asset terms goes down. So assets optically go up in value because the purchasing power of the dollar versus scarce assets goes up. And crypto has been the best horse in that race. Technology has been particularly good at offsetting it. If you divide the S&P by the central bank balance sheet, zero performance since 2008. Gold, zero. In fact, gold is negative. Real estate, zero. It's only NASDAQ, only technology, and crypto that's actually outperformed the debasement of currency. So it's really important what horse you back. So we're going into 2024. We've got sluggish economic growth. I think inflation will continue to fall all year because I think structural issues within the economy, from aging populations to AI, will actually surprise people to the downside with inflation. So I'm not an inflation sticky person. There's different types of inflation, right? We're talking asset inflation caused by debasement of currency versus CPI inflation. In an election year, the government's job is to give out as much candy as possible to voters. All they want to do is buy votes. You will always get stimulus. Since 2008, we had a great reset of the debt markets. Every major government hit 100% of GDP in debt by 2008. That's the Europeans, the Brits, the Americans, Japanese, Chinese. And what they all did was cut rates to zero in 2008. That was essentially a debt jubilee. It's like you don't pay the interest on the debt. That's really what it was. So if you don't pay the interest on the debt, what did they do? They all refied all of their debt. So it's 100% of GDP in debt. So all economic growth essentially goes to paying off the interest payments on the debt. So what you need to do is lower the interest costs of the debt. They did that, and every government reset their debt to 3 to 5 year. That 3 to 5 year cycle is the debt refi cycle. It's exactly how the economy has been working. So you come into year 4, it's the down year. That's when the economy slows because rates have gone up because they have to try and refi. What happens is rates then fall. They use the balance sheet, and they use the balance sheet to pay off the interest of the previous cycle. And I've kind of proven that out over time. That 4-year cycle is exactly the same as the Bitcoin halving cycle. Why? Because Bitcoin came in 2008. It's also the same as the presidential election cycle. Why? Stimulus, right? They're all the same thing.
Raoul believes that the more money that's printed, along with the government's quantitative easing, has resulted in complete malinvestment and massive inflation. Raoul believes banks are attempting to achieve interest rate neutrality without completely destroying the world economy. Investors have begun speculating that tighter financial and credit conditions for households and businesses are likely to weigh on economic activity. Raoul looks at what economic indicators we can expect concerning inflation, the stock market, and the potential impact of cryptocurrencies on the global monetary system.
So the other thing to bear in mind about 2024, 2025 is, okay, we've now built the ETF, which I think of as a trade deal between crypto land and fiat world. It's not immigration into crypto land because these people are using centralized counterparts to do this, as opposed to myself, who will use my ledger device for self-storage. But we're going to bring a lot of FDI, foreign direct investment, and tourism income into crypto land. Huge amounts of it because of the stimulus and the fact that it's the best returning asset price on earth. So we've got that to also ignite this crypto economy. On top of that, Tim and many VCs like him have piled money in 2020 and 2021. 67 billion went in. That money has been building applications layers, infrastructure layers, all sorts of stuff. Right, a lot of this will come to market. Some of it doesn't. Some of it failed in the down cycle, but there's a lot of stuff coming to market. And so how I look at this is this cycle, as we go from 516 million wallets to I think 1 billion and beyond in this cycle alone, that it's going to be an everything, everywhere, all at once cycle. All of the kindling is in place. The banks, all the asset management firms are both investors, but are also building on blockchain rails. All of them. So whatever Jamie says, and I've spoken to him directly about this, that he's wildly interested in this space, and they will, JP Morgan, Goldman, everybody are building on these rails. The big brands are building on the rails for Web3. We're seeing a lot of that already in sports teams, car companies, luxury brands. I think the breakthrough of Solana compressed NFTs, allowing for 1 million NFTs to be minted for $100, means that allows ticketing and other breakthroughs of what we can use NFTs for, because NFTs are not just PFPs and stuff like that. In addition, the ongoing rise of stablecoins. That's basically a tokenized euro-dollar market that allows somebody working in the rice fields in the Philippines to own dollars, which is impossible for them. And then just the ongoing adoption of crypto. So I know it sounds ludicrously bullish, but that's where we are in the cycle. I mean, I've been in crypto since 2012. And each time you just see it grow and grow and grow as more participants come and more use cases get built out. It's a very concentrated bet, so I'm pretty much 100% crypto and have been for a long time now. And I make asset allocations about weightings. I don't really do, and I've tried it in the past to try and own a broader diversified base of tokens. I just end up with shrapnel in my wallet that I don't care about. I like to really focus on what I'm doing. So my big focus for this cycle is Solana, and that's been for the last year. Obviously, I have a lot of ETH. I still have some Bitcoin, and then I have a few other tokens here and there. But really, it's a very concentrated bet on what I think is going to be the breakthrough for this cycle. And so, yeah, I'm not diversified at all. So I'm a terrible human being because I'm an investment guy and I should have this broad diversified portfolio. I'm not at all. I'm a profit maximalist when it comes to the opportunity set, but a philosophist when it comes to the opportunity set that this whole space provides.
Raoul Pal uncovers how changes in cryptocurrencies can send ripples effects through our wallets. Imagine a world where borrowing money becomes more expensive. Those cool credit card deals and car leases might not be as sweet. But it's not just about numbers, it's about fairness and how many things we can buy. Among the market noise, Bitcoin emerges as a rebel in the money world, shaking up old traditions. Pal points out that the everything code is like saying money is this invisible thread that's connecting it all together. With big banks being the guardians of balance, he says they're working behind the scenes to keep things steady, preventing financial chaos, but he believes the inevitable is coming. What do you think about the latest interview with Raoul Pal? And how do you think his prediction for Bitcoin, crypto, and the financial market plays out in the last part of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.